Yes.
Well, good afternoon. Jason Sheppard here, Movement Mortgage. I am joined with Pearl Lewis, our resident HECM specialist. And Pearl, I want to know one thing. What the heck is HECM?
What the heck is HECM? HECM stands for Home Equity Conversion Mortgage. A lot of people call it a reverse mortgage, but technically it's called Home Equity Conversion Mortgage. And that is the gold standard backed by FHA and HUD. It is what I plan to do the moment I turn 62. And you should too.
All right. So what all is HECM good for?
So there's a couple different types of people that we work with. One is if they have an existing HELOC on their mortgage, maybe they paid off their entire mortgage, but they have a small HELOC or a small mortgage balance left, and they're making payments on that. What we would do is we would refinance that over to a HECM. And what this allows is the option to either access a line of credit, access a portion of the equity that is in their home with the option of not making a mortgage payment if they don't want to. So it's a real game changer to help with cash flow and retirement strategy to basically eliminate the obligation of a principal and interest payment. There's a lot of people, sadly, who are in their 70s and older who are still making a mortgage payment today. And what's going on is they are potentially taking money out of their retirement funds or living on a lot less monthly income because they feel the stress and the burden of, my gosh, I have to make this house payment. And so this really does give a lot of peace of mind and free up cash flow and preserve and protect any retirement assets under management to keep that strong.
So if a homeowner decided to do a HECM on a property they currently own, how would they get the money for the HECM? How is it dispersed to the buyer or the borrower?
So if there's enough equity, say somebody has a completely paid off house or has a little baby mortgage left and they have a significant equity available, we would look at the homeowner's age and look at what the guidelines share of what amount of equity we can offer to that homeowner. And we can go over specific scenarios one by one, reach out to me or reach out to Jason. He'll introduce to me or our team. There's a couple options. You can have a line of credit, which is great, where that line of credit is growing and you can access those funds later. There could be a one-time lump sum right away and the rest in the line of credit, or even the option of a monthly payout. The beautiful thing is this is options.